And as Steve just reported, the recent rout in commodity prices is on the Fed's radar. But today, oil prices rebounded from near 6-month lows. West Texas crude settled up nearly 2% to $48.79 on a possible surprise move by the world's biggest oil producer, Saudi Arabia. But as Jackie DeAngelis explains, the move higher may be short-lived.
Oil prices popping on the session. One of the contributing factors, some headlines coming out from Saudi Arabia that the country could cut its production at the end of the summer and throughout the rest of the year. The numbers that we're looking at, 10.3 million barrels a day, hovering around 10 million barrels a day, according to sources, by the end of 2015. Traders saw this as a bullish sign for crude prices, but then said they're concerned it may not be enough of a production cut from Saudi Arabia. They'd want to see something along the lines of 1 million barrels a day to really believe that this is significant enough to impact the oil market. Still, of course, there have been many factors that have been pressuring crude prices down 15% in the last month. One of them, Iranian oil, the potential for it to come back online. Of course, we're still waiting for Congress to potentially approve the deal that was passed by President Obama and the other world powers. But the question will be when this oil, if and when it comes back online, what that will do to the market, and if U.S. production cuts and production cuts coming out of Saudi Arabia will be enough to still balance the supply-demand equation. The overarching theme in the pits right now is that the bias is still to the downside, although the shorts are telling me that they're a little nervous. Reporting for Nightly Business Report, I'm Jackie DeAngelis.